The reason I think the Fed could be caught flat-footed is the jobs report, the government jobs that we've seen. To me, they've masked the rapid deterioration in the private sector. And once that veil is lifted, Powell & Company, I think, will have to scramble. Joining me now, QI Research CEO and Chief of Strategist, Danielle DiMartino Booth. All right, Danielle, let's talk about this. The wage growth situation is really, really critical here.
And we have seen in the Fed's favored employment metric, the employment cost index, we saw that gap down this morning unexpectedly. And again, that is the one that the Fed follows the most closely.
I pulled the chart up so the audience can see it.
Yep.
So, I mean, we've been in a steady decline, but again, it get really sharp today.
Yep.
This is less than Wall Street expected. This is the Fed's favorite wage gauge.
It is. And look, you're using the word free fall. In the research that we've been writing at QI, we have been saying abrupt. Things are happening very abruptly, and that speaks to the pace of decline. And to your point, the private sector is in much worse shape, but this is being glossed over by government job creation. That is not the sign of a good economy. It's not.
I think a lot of that government job stuff was money that they got. The government got this. These states and local government got the money from federal government, which is so interesting because a lot of times folks say, "Oh, that's state local," but they got the cash from that COVID money, and that money is going to run out real soon.
It is.
So let's talk about the stock market because Wall Street is always sharing. Oh, we don't have the chart in the end. We're going to put another chart in here, but Wall Street's.
I thought we were going to talk about Tabasco sauce.
That was a surprise for the next guest. All right. So Wall Street is always talking up, these rate cuts, but we do know that rate cuts during a recession. The stock market goes down.
That's exactly right. And we typically see really volatile trading until the Fed actually cuts rates. When the Fed actually cuts rates, that's when your stock market correction kicks in, historically speaking, unless, Charles, this time is different.
Here's my theory. I think Jay Powell, if he's got to make a mistake, and you heard Edward saying that they made a nod to both sides of their mandate.
They did.
If he's got to make a mistake, it'd be, all right, maybe I'm a little late. Maybe some of this data comes in and it's abrupt. And the September rate cut is 50 basis points instead of 25. Does that catch them up?
No, it doesn't, because that means if they start to see unusually large rate cuts, then they're going to be trying to play catch up. And there's a big distance between now and 7 weeks from now. It's a big, long distance in terms of time that a lot can go wrong. And we're already seeing the private sector. Look at Intel last night, 10,000 job cuts. We're seeing the private sector be much more aggressive in cutting headcount.
When you were at the Fed, how much importance did they put on corporations, right? To your point, every corporation, every single corporation that serves the public, the consumer, is putting up the warning flag.
They are. I mean, Match.com laid off yesterday, NerdWallet laid off, one after another with these earnings releases. And we have to remember that Jay Powell founded the Industrials Group when he was at the Carlyle. He speaks to these CEOs. Either he's not listening or he's choosing to not listen.
So before I let you go, you say the highest odds right now are that the Fed is committing a policy error.
Absolutely. I think they're committing a huge policy error. I completely agree with you. They should have moved today. They're behind the curve.
All right. Want you to stay. The part that you and Ali do when we go into the Fed comments scores high on the ratings. So we want you here because the fans love it. People need to understand the Fed speak. Thank you very much, Danielle.
Thank you, Charles.
All right.